This is terrible. What we saw last week is probably the most extreme event in crypto history. And when something insane like that happens in crypto, it's easy to let emotions take over. Panic sets in, you watch your portfolio turn red after all the hard work you did to get positioned, you make rush decisions only to end up missing out on the recovery. But if you managed to stay calm during last week's chaos, you may have noticed something strange about certain coins, something that doesn't add up. And it's revealing a shift in the market that most people are completely missing. Now, it feels like half the people I talked to were unaware of this event, so let's recap what happened. Last week, we witnessed the most extreme flash crash in the crypto market. It was even worse than the COVID crash because Bitcoin went through a massive breakdown. First climbing all the way up to $126,000, hitting a new all-time high, then free falling all the way down to just over 100K. That's almost a 20% correction. And most of this drop took place within just a few hours. It wasn't just a normal gradual decline. This was a violent, sudden crash that wiped out leverage positions across the board. Ethereum also felt this drawdown. After climbing up to $500, ETH got pushed down to $3,500. That's roughly 30% of progress gone in the blink of an eye. Solana, one of the cycle's most popular altcoins, wasn't spared either. Sol had been trading around $240, and during the crash, it plummeted back down towards $160. That's over a 30% drop. For an altcoin that's supposed to be one of the stronger performers, that's pretty concerning. But XRP was the one that got hit really hard by this. Just months ago, all eyes were on XRP running to new highs, and it was consistently trading in a higher range. But look at this price drop. XRP ended up losing half of its value within just hours. It's scary. Now, the reason why we're calling this a flash crash is because it lasted for such a short amount of time and quickly recovered. For most people holding spot assets, if they didn't try to sell in a panic, then this crash didn't really impact them too much. Yes, the new trading ranges are lower than before, but that steep drop lasted no more than a few hours. And typically, when these market leaders pull back to a lower range, the rest of the market follows. That's just how it works. It's a pattern we've seen play out over and over again. But here's the thing. There were several coins that actually moved up to a higher range, while the bigger alts are still struggling to fully bounce back. For example, this is what the ZERA price chart looks like. Yes, it did feel the impact of the market crash, especially because it's a token on the Solana network, but it ended up setting a new all-time high just one day after the flash crash. Of course, the market cap of the coin is much smaller than the leading alts, which means it can move faster in either direction. And it actually reset a bit after the push. But what's so special about this coin? Why am I even choosing to show this coin specifically out of all of the ones out there? Well, ZERA actually represents a part of something much bigger that we need to pay attention to in crypto. Remember when AI crypto and AI agents exploded? Or even when BNB memes started popping off, anyone that got positioned in time was able to take advantage of these narratives moving up. And now the signs are flashing for what could be the next big thing in crypto. So keep watching if you want to stay ahead of the curve. If you haven't already, make sure to hit those like and subscribe buttons and turn on post notifications so you can stay up to date with me and everything in crypto. Now, with the flash crash in mind, this is a great time to say that crypto comes with a high risk. Anything can change without warning. Make sure to do your own research and understand the risk before making any investment decisions. And as always, none of what I share is financial advice. So let's take a quick look at what actually happened during this crash, because there are some theories floating around about market manipulation. One person who's been vocal about this is Marty Party, who's been pointing out some red flags with large centralized exchanges, especially Binance. He believes that prices are being artificially pushed up and down by the exchange's market makers, and the reason for this is simple: money. Before the big crash, anyone with an open leverage long position had a liquidation level somewhere below the price. So if the price were to fall down to that level, the trader's position would get wiped, and their initial funds put into that position gets taken by the exchange. This one flash crash led to a reported $20 billion of liquidations, although many believe the correct value is much higher than what's reported. But that's real money that traders lost, and all of that goes to the exchanges these users were on. and anyone that already suspected manipulation for the crash is now calling out the major exchanges for this event. Another issue is that during the crash, there were extreme price differences between exchanges. We're talking about significant gaps in pricing due to Oracle data issues. This is bringing up major questions about the reliability and safety of trading on centralized platforms. If prices can vary that drastically between exchanges during critical moments, how can traders trust that they're getting fair execution? Binance and other major platforms are under a lot of heat from their users because of what happened. We did see Binance make an announcement about a $400 million initiative to reimburse losses. This is their way of maintaining market confidence for users. But this number is nowhere close to the many billions that were wiped out. And people are continuing to call out these major exchanges. Now, most altcoins got hit hard during this event, but some withstood the large drawdown. And one big reason for this is control from large exchanges. If the theory is correct about the price being pushed down intentionally, then there needs to be a coordinated sell-off of assets to make an event like this happen. A lot of smaller coins aren't really on any major exchanges for this to be possible. For example, ZERA is a relatively new project and token that hasn't gained widespread attention yet, which could explain how it was able to push to a newer high right after the crash. What's crazy is that we were talking about this token in the Discord when it first launched under the name Monopoly Money 4 months ago. The token went through a migration to change the name and fit the new brand, but you can see how earlier members knew about this one. I'll leave the link to the Discord group in the description below in case you're interested in learning more. But why was something new and small like ZERA going up while most of the market struggled? Well, remember how Zcash went for a nice big run up? Well, it's related to this. Zcash is running on the privacy narrative, and ZERA is a brand new product built for private offline digital cash transactions. In short, this is a platform that's designed to let users spend their crypto like cash. Transactions can take place offline, and while it eventually settles on the blockchain, the sensitive information about the transaction is kept private, including who sent the funds, who received it, and how much was sent. It's basically like using cash in the real world, but in a digital form. This is made possible with zero-knowledge proofs, and while there is a lot to say about the tech behind this, the end user basically gets to send and receive transactions without worrying about being watched and tracked on chain. As of now, this is a work in progress and we haven't seen a functioning product yet, but the dev Dax is focused on getting this out to the masses. I've spoken to him directly and there's a lot of progress being made even in the real world. The project joined the Texas Blockchain Council, then ZERA Labs officially became a real company, registering as a business in the state of Texas. They even submitted a proposal to the state for digital privacy rights. And if you follow their X account, you'll see all the effort they're putting into pushing the privacy agenda in Web3. But ZERA is just a small fraction that represents privacy in crypto. But does privacy actually matter? Well, we all know that crypto is slowly merging with real-world finances. So I'll use a real-world example to illustrate how privacy might be more important than you realize. So let's say you're buying a coffee from a shop and they accept crypto.
Yes, we accept crypto.
You scan a QR code, send the payment, and that's it. Simple and fast, which is a huge benefit of using crypto. But here's the problem. That coffee shop now has your wallet address. And because everything on most leading blockchains is public, they can see your entire transaction history. How much crypto you hold, where you've been spending your money. It's like handing the barista your bank statement every time you buy a coffee. But then you have to remember, data leaks happen all the time. So imagine someone leaks transaction history data from that shop. Now some random person out there could be tracking your wallet activity. And if you're a regular visitor of that shop, there's a risk of someone linking that wallet to you directly. This should be a clear sign that crypto in its current state isn't really safe enough to start using in the real world. And more importantly, privacy isn't just a cool feature to have available. It's essential. Because without it, crypto becomes a surveillance tool. And the more we use it in everyday life, the more exposed we become. This is the problem that privacy-focused projects are trying to solve. Aside from ZERA, there are several teams out there building their own products and platforms to target the same issue. We already mentioned Zcash earlier, which is one of the OG privacy coins. They also use zero-knowledge proofs to keep transactions private, allowing you to prove a transaction happened without revealing who sent it, who received it, or how much was sent. The recent run that I went through started bringing more attention to the crypto privacy issue. But there's also a project called Zama, which uses fully homomorphic encryption. This allows smart contracts to perform computations on encrypted data without ever decrypting it. You could run complex DeFi operations on private information without exposing what that information is. This project has been in development for several years, and right now their apps and services are live on a public testnet. The official Zama token launch is also coming up soon. There are also protocols currently running live to help keep transactions private. For example, Privacy Cash is a platform that lets you send transactions privately on the Solana network. And just like this, there are many other protocols popping up. So privacy is clearly a rapidly growing topic in Web3. But here's the reality. Privacy is also a double-edged sword. If transactions can't be traced, that opens the door for crime, money laundering, illegal purchases, fraud. So it'll be important to find the right balance. Maybe private transactions that can be audited if there's a warrant or legal case involved. The industry will have to figure this out as privacy technology becomes more mainstream. So where does this leave us? Well, first off, privacy in crypto is important. Users deserve to have control over their financial information, and as we've seen, there are several people working on solutions to make that happen. So if you're not paying attention to this shift, you might miss the next big move in crypto. But let's also bring this all back to the flash crash we started with. Because at the end of the day, crypto is risky. Events like this can happen without warning. And whether it's manipulation from exchanges or just extreme market volatility, you need to be prepared. If you're futures trading, make sure you have the right safety measures in place. Use stop losses, don't over leverage yourself, and if you're holding spot, consider moving your assets off exchanges and into a cold wallet. That way, even if exchanges face any issues, your funds are secure. And if you want to stay ahead of the curve and discuss trading strategies, opportunities, and the latest narratives in crypto, I'll leave the link to the Discord group in the description down below. There's a team and community there that's been on top of projects like ZERA from the very beginning. It's a great place to learn and connect with others who are serious about navigating this space. At the end of the day, whether it's getting positioned in the next big narrative or just surviving the volatility, the key is to stay informed and manage your risk. Now, just because I'm talking about a project doesn't mean you should just blindly invest. Remember that none of what I'm saying is financial advice. It's important that you do your own research before making any decisions. That way you can fully understand what you're getting into. And don't forget to smash that like and subscribe button for more videos like this. Thanks for watching, and I'll see you in the next one.